Welcome to the Ultra Prime Selections YouTube channel. Today, we're gearing up for an intriguing lineup of content. While we have a major episode coming later this week, focusing on a hot topic that's been the center of much debate, today's episode has its own unique flavor. We're putting a spotlight on the complex issue of Canada potentially becoming the 51st state of the United States. With Prime Minister Trudeau's recent speech about potentially stepping aside and a mix of fear and uncertainty brewing, we understand you have questions that need answers. Stay tuned as we dive deep into this topic with statistics you need to see and insights you need to hear. Our team is finalizing some key details to ensure we bring you the most accurate and comprehensive analysis possible. Plus, don't miss out on a powerful message from the founder of Ultra Prime Selections Incorporated, aimed at everyone across North America. In times of change, standing united is more important than ever. So make sure to subscribe and hit the notification bell to stay updated on all our latest content, including this crucial analysis. It's something you truly do not want to miss. Now to today's episode.
The US dollar is more than just a currency. It's a symbol of power, stability, and global trust. For decades, the world has relied on the dollar as the bedrock of international trade. It's the safe haven in uncertain times. Countries hold their reserves in dollars. It's the foundation of the global financial system. Emerging markets are bearing the brunt of this dollar-driven crisis. These nations find themselves shackled to a financial system where the rules are set by a currency they don't control. The dollar's strength translates into economic hardship for others. This is about real people, real lives, and real struggles. The path forward requires a global conversation and a willingness to explore solutions. To understand the dollar's dominance, we must journey back to 1944. The Bretton Woods Agreement established a system of fixed exchange rates with the US dollar as the anchor. The dollar, pegged to gold, became the world's leading reserve currency. This ushered in an era of unprecedented stability and growth. However, by the early 1970s, the system was under immense pressure, leading to its collapse in 1971. The collapse of Bretton Woods led to the petrodollar system. In 1973, the U.S. struck a deal with Saudi Arabia to price oil exclusively in dollars. This created a perpetual demand for dollars, cementing its role as the world's reserve currency. The petrodollar system strengthened U.S. influence globally, but it also created a system of dependence on the global oil market. Emerging markets became increasingly reliant on the U.S. dollar. They borrowed in dollars, attracted by lower interest rates and easier access to capital. However, a strengthening dollar made repaying these loans more expensive. During economic crises, this vulnerability became evident. The seeds of dependence had been sown, and the debt trap was beginning to spring. Emerging markets were drawn to the stability of the US dollar. Borrowing in dollars became a strategic move to access cheaper credit and attract foreign investment. This fueled remarkable growth but also immense vulnerability. The dependence on the dollar would later become a source of risk. The seeds of a debt crisis were being sown. The global financial system built on the dollar resembled a house of cards. The 2008 financial crisis exposed the fragility of this system. Emerging markets, reliant on dollar-denominated debt, felt the full force of the crisis. The crisis highlighted the risks of relying on a single currency. The house of cards was left teetering. The 2008 crisis was a wake-up call, but lessons were quickly forgotten. Emerging markets continued to accumulate dollar-denominated debt. The COVID-19 pandemic and rising inflation have created a perfect storm. The dollar's strength has made it more expensive for emerging markets to service their debts. The crisis is not merely financial, it's a crisis of sovereignty and development. The Federal Reserve's decisions reverberate far beyond American shores. The Fed has been walking a tightrope, attempting to tame inflation without stifling growth. Recent interest rate hikes have had a profound impact on emerging markets. The dollar has surged in value, exposing vulnerabilities. The Fed's balancing act has global consequences. For emerging markets, a strengthening dollar is a double-edged sword. It makes exports more competitive but exacerbates debt burdens. A strong dollar can fuel capital flight, weakening currencies further. This creates a vicious cycle of depreciation, debt, and instability. The dollar's dominance can drown emerging markets in economic turmoil. The impact of the Fed's actions goes beyond balance sheets. Currency collapses can lead to social unrest and political upheaval. The human toll of economic turmoil is profound and enduring. The dollar has become both a lifeline and a potential noose. The fate of emerging markets hangs in the balance. The dollar dictates the terms of global trade. Commodities traded globally are priced in US dollars. A strengthening dollar raises the cost of importing essential goods. This strains economies and fuels inflation in developing countries. The dollar's dominance exacerbates inequalities and hinders growth. Section 2. Commodity Conundrum, Fueling Volatility and Uncertainty. The US dollar's fluctuations impact global commodity markets, creating volatility and uncertainty. A strong dollar can benefit exporters but hurt global competitiveness and demand. Importing nations face rising costs and inflation, leading to economic strain. The dollar's dominance adds volatility, disproportionately affecting emerging markets. The inherent risks associated with a dollar-denominated global trade and commodity system have not gone unnoticed. Increasingly, nations around the world are exploring ways to reduce their dependence on the US dollar, seeking to create a more diversified and resilient global economic order. One avenue being explored is the use of alternative currencies for international trade. Regional trade blocs, such as the BRICS nations, Brazil, Russia, India, China, and South Africa, have been actively promoting the use of their own currencies for bilateral trade and investment, reducing the need to convert to US dollars for every transaction. Another approach is to establish alternative payment systems that bypass the traditional SWIFT network, which is heavily influenced by the United States. These alternative systems aim to facilitate cross-border payments in local currencies, reducing the need for dollar clearing and potentially mitigating the impact of US sanctions. The quest for diversification extends beyond currencies and payment systems. Countries are also seeking to diversify their trading partners, reduce their reliance on a single market for essential goods, and strengthen regional cooperation to enhance economic resilience. The goal is to create a more balanced and multipolar global trade system, one where the fate of nations is not solely tied to the fluctuations of a single currency. The dollar's dominance is not unassailable. A growing chorus calls for a more equitable financial system. Nations seek alternatives to the dollar. BRICS nations lead the charge. China promotes the yuan. The quest reshapes global power. The pursuit of alternatives to the dollar extends beyond individual currencies, encompassing a broader movement towards regionalization and the creation of trading blocs that operate outside the traditional dollar-denominated system. These regional trade agreements, often accompanied by their own payment mechanisms, offer a way for countries to reduce their reliance on the dollar, enhance their economic sovereignty, and foster greater regional integration. One prominent example is the Eurasian Economic Union, or EAEU, a political and economic union of several former Soviet republics, including Russia, Kazakhstan, and Belarus. The EEU has its own payment system, designed to facilitate cross-border transactions in local currencies, reducing the need for dollar clearing and minimizing exposure to U.S. sanctions. Similarly, the Association of Southeast Asian Nations, or ASEAN, has been working towards greater economic integration, including the establishment of a regional payment system and the promotion of local currency settlement for intra-ASEAN trade. By reducing their reliance on the dollar for regional transactions, ASEAN members aim to mitigate currency risk, enhance financial stability, and promote economic growth within the bloc. These regional initiatives reflect a growing recognition that a multipolar world requires a multipolar financial system. By fostering greater regional cooperation, diversifying trade relationships, and developing alternative payment mechanisms, nations are seeking to create a more balanced and resilient global economic order, one where the dominance of a single currency no longer dictates the terms of trade and investment. Amidst the search for alternatives to the dollar, a new contender has emerged, one that challenges the very foundations of the traditional financial system: cryptocurrencies. These decentralized digital currencies, operating on blockchain technology, offer a glimpse into a future where financial transactions can occur seamlessly across borders, free from the constraints of central banks and government control. Bitcoin, the first and most well-known cryptocurrency, has captured the imagination of investors and technologists alike, its value fluctuating wildly as it navigates the uncharted waters of a decentralized financial system. While Bitcoin's volatility makes it an unlikely candidate for a global reserve currency in its current form, its underlying technology, blockchain, has the potential to revolutionize the way we think about money and finance. Stablecoins, a type of cryptocurrency pegged to the value of a fiat currency like the US dollar or the euro, offer a more stable alternative to Bitcoin, potentially facilitating cross-border payments and remittances with greater efficiency and lower costs. While the future of cryptocurrencies remains uncertain, their emergence represents a fundamental challenge to the existing financial order. As blockchain technology matures and regulatory frameworks adapt, cryptocurrencies could play an increasingly prominent role in international trade and finance, potentially reshaping the global monetary system in the decades to come. Imagine a world where the global financial system is no longer dominated by a single currency. Trade flows freely across borders, facilitated by a basket of reserve currencies reflecting a multipolar world. This potential future scenario is driven by forces reshaping the global economic landscape. The US dollar would share its throne with other major currencies like the euro and yuan. This multipolar system offers greater stability and resilience. Emerging markets would have greater control over their economic destinies. They could borrow in a wider range of currencies, reducing exposure to currency risk. This transition requires unprecedented international cooperation and new regulatory frameworks. The potential rewards make this a future worth striving for. Section 2. Navigating the transition challenges and opportunities in a post-dollar world. The shift away from a dollar-centric system, while promising, would be fraught with challenges. The transition itself could trigger volatility in currency markets, potentially disrupting global trade and investment flows. Establishing trust and stability in a new monetary order would require careful coordination and a commitment to cooperation among nations. One key challenge would be managing the transition without exacerbating existing geopolitical tensions. The United States, accustomed to the privileges of issuing the world's reserve currency, might resist a shift that diminishes its global influence. Navigating these geopolitical sensitivities would require diplomacy, compromise, and a recognition that a more balanced system ultimately benefits all players. However, this transition also presents significant opportunities. Emerging economies, no longer constrained by the limitations of a dollar-denominated system, could experience accelerated growth and development. Regional trade blocs could flourish, fostering greater economic integration and reducing reliance on traditional financial centers. Moreover, technological innovations such as blockchain and digital currencies could play a transformative role in this new era. By facilitating faster, cheaper, and more transparent cross-border payments, these technologies could empower individuals and businesses, particularly in emerging markets, further reducing the reliance on traditional financial institutions and the dominance of any single currency. Section 3. The enduring legacy. The dollar's evolving role in a changing global landscape. Even in a multipolar world, the US dollar is likely to remain a significant currency, albeit with a diminished role. The size and sophistication of the U.S. economy, the depth of its financial markets, and the enduring legacy of its institutions would continue to make the dollar a safe haven asset for many investors. However, the dollar's dominance would no longer be absolute. It would need to compete on a more level playing field, its value determined by market forces and the relative strength of the U.S. economy, rather than its privileged status as the world's reserve currency. This transition would require the United States to address its own economic imbalances, including its persistent trade deficits and growing national debt. A more competitive global landscape would demand fiscal responsibility, innovation, and a commitment to maintaining the integrity of its financial institutions. The dollar's enduring legacy, however, will depend not only on its economic strength, but also on the United States' ability to navigate a changing world order. By embracing cooperation, promoting fair and transparent financial practices, and recognizing the aspirations of emerging economies, the United States can ensure that the dollar continues to play a vital, albeit evolved role in a more multipolar and prosperous world. The high cost of dollar dependency. The US dollar's dominance has immense privilege for the US, but at a steep cost for many nations. It's a slow-burning crisis, felt most in emerging markets dependent on a currency they can't control. This crisis is about human lives, aspirations, and the struggle for a better future. The dollar's hidden crisis is a wake-up call for a more just financial order. Section 2. Charting a new course towards a more equitable and resilient financial future. The challenges posed by the dollar's dominance are daunting but not insurmountable. The search for alternatives is already underway, driven by a growing recognition that a multipolar world demands a multipolar financial system. From regional trade agreements to the rise of digital currencies, the seeds of a new monetary order are being sown. This transition will not be easy. It will require navigating geopolitical sensitivities, fostering international cooperation, and embracing innovation. It will demand a willingness to challenge the status quo, to question long-held assumptions, and to envision a future where financial power is more equitably distributed. The path forward lies in diversification, in creating a system where no single currency holds absolute sway. It lies in empowering emerging markets, giving them a greater voice in shaping the rules of global finance. It lies in harnessing the potential of technology to create a more inclusive and accessible financial system. The dollar's reign as the undisputed king of the global financial system may be drawing to a close, but the future of finance is not predetermined. It's a future we have the power to shape, a future where stability and prosperity are not the exclusive domain of a few, but the shared inheritance of all. Gap 5S, Section 2, Charting a New Course Towards a More Equitable and Resilient Financial Future. The challenges posed by the dollar's dominance are daunting, but not insurmountable. The search for alternatives is already underway, driven by a growing recognition that a multipolar world demands a multipolar financial system. From regional trade agreements to the rise of digital currencies, the seeds of a new monetary order are being sown. This transition will not be easy. It will require navigating geopolitical sensitivities, fostering international cooperation, and embracing innovation. It will demand a willingness to challenge the status quo, to question long-held assumptions, and to envision a future where financial power is more equitably distributed. The path forward lies in diversification, in creating a system where no single currency holds absolute sway. It lies in empowering emerging markets, giving them a greater voice in shaping the rules of global finance. It lies in harnessing the potential of technology to create a more inclusive and accessible financial system. The dollar's reign as the undisputed king of the global financial system may be drawing to a close, but the future of finance is not predetermined. It's a future we have the power to shape, a future where stability and prosperity are not the exclusive domain of a few, but the shared inheritance of all.